This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Thursday, July 23rd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at September corn up 2 at 464. August soybeans were up 8.5 at 1241.5, and September Chicago wheat was up a penny and a half at 707 1/4. This morning, we had an export sales announcement of 126,000 metric tons of soybeans to unknown destinations for 26. Also, weekly export sales were out. Old crop corn, 332,700. That was below the low end of the range. Solid on new crop, 701,500. On the soybean side, 56,400 on the old crop. However, good solid sales on the new crop, 1,537,200. Wheat was at the low end of the range, 290,000. Meal was in line with estimates, 185,000 for old crop. Solid new crop, 406,100 there on the meal side. And for oil, 600 old crop sales, nothing for new crop there. We've got crude oil this morning up 460 right now, 91.42. So Dustin, I guess with that, let's start the show. Give us a few thoughts here this morning, and then we'll throw around the room.
Yeah, thanks, Dan. Yeah, so, it's weather and geopolitics. Weather's still, on the dry side, warmer and drier for the next 2 weeks. Starting to hear some rumblings just from our base, just, how that stress is showing up in some areas. We've got European corn prices going up dramatically. Ukraine, Russia, right? One of Russia's primary shipping routes is suspended right now. So that's been certainly driving the wheat market up. Wheat's been the clear winner in the month of July, and corn's following that as well. But energy prices, we've got crude oil up to 91.60 is the high this morning for September crude. And the Houthis have now gotten involved as well. We're definitely in a more fragile state, having liquidated hundreds of millions of barrels from SPR. And I would say that's one of the big things that is probably weighing on managed money's minds here. Is as you're moving above these major moving averages and they're getting momentum, they're buying out of a contract, out of fear. How long does that war premium last? I mean, Trump could, go back to trying to sign an MOU, or maybe we even, concede a lot of things just to get things under control. So I don't necessarily want to bet that this is going to continue to be the primary driver and we're just going to go up because of it. And war premium, we tend to get numb to it at certain points, right? Look what happened with the whole Ukrainian war. Eventually, those headlines, stop being carried by the market. It does feel like this is a little different, though, to me, and I just think that you tread cautiously on how you set ceilings. We're definitely, leaning into this strength and trying to raise our average floor price for people that have good crop potentials. No question, right? It's just the pragmatic risk management, but leaving something open is still kind of top of mind, just because, we're in uncharted territory right now.
Very good. Ben, what's on your mind this morning?
A few weeks ago, we mentioned that for the bear, one thing had to go really right, which was record type yields, and I think that story is losing some momentum as we look at poor weather, finishing weather out in the West. And it's debatable how poor it is, how bad it is. There's definitely some rain in the forecast, so it's not bone dry. But then all the little things, whether they're little or big, is the the difficult conditions in Europe and France, what's going on in Russia. You know, those are things that can really redirect the flows. The Strait of Hormuz is continues to be a problem with elevated crude. So a lot of these little things are kind of becoming bigger things at the same time that there's a perception that we're having at least not maybe the big numbers that people were talking a month ago. Talking before we came on the air too, there's certainly a noticeable frustration amongst a lot of the talking heads, the people that are your kind of continuous posters on social media. And I think that there's the counter seasonal rally here has probably got some people sort of sideways in this market. That being said, we're in a window here. You know, just pointing out how wheat acted going into the harvest. It broke $1.20 from May into its harvest and its first notice day, and it's turned around and, you know, rallied $1.30 since then. So you can have that same sort of volatility in the corn over the next couple of months. I think the corn has a story beyond harvest. So you know, the window here is interesting because we typically will see, you know, a long is pretty hard normally this time of year until you get into early September. So I think volatility stays for a while here. We saw it yesterday in the last half of the day. There was definitely some aggressive option buying in corn. So.
Very good, Justin. You know, we continue to truck almost 490 new crop corn here. This morning, 89.5 was the high. So I guess anything to add to what the boys have talked about here this morning?
No, I think they hit all the major points. You know, we just have a lot of tailwinds, and we're coming off of, you know, people are frustrated because we're, you know, supposed to be breaking now, but we already had our break. You know, we broke 80 cents from mid-May to mid-June or to the end of June. You know, so we got, like I said, we got a bunch of fresh shorts that pounded the market. We traded recordy type yields again, and we kind of ignored demand because we're just going to have big enough yields, it doesn't matter. And now you start throwing questions in there about yields, and we're coming from such a high point that, you know, I think part of it is it's not like we have to have bad yields. We just have to have non-record yields. You know, I think that's a big difference. You know, like people that are getting all worked up on X because, you know, we're trading some kind of horrible yield. I don't think the market's anywhere close to trading a bad yield. I just think we're coming down from really high expectations, personally. I still think market's trading, you know, I was trying to figure that out, you know, kind of driving in what I thought the market was trading yield-wise. I kind of think we're still in like maybe low 180s type yield for corn. I don't think the market's anywhere close to trading like a 175 or anything like that. I think we'd be sharply higher from here if that were the case, because we just really don't have a big buffer in corn. And then to Ben's point, I think there's enough of these tailwinds globally, and to Dustin's point with geopolitics, it's just going to be I think it's going to be a tough short for managed money or the specs to want to stay short, you know, much longer personally. Now, to that point, all that kind of fear and short covering and has created a lot of good opportunities for people that do have, you know, good crops, you know, to raise floors, and you're getting a second chance here, you know, for all the people that didn't sell anything in the spring. So we're, you know, we've taken advantage of it as I think you should here, but yeah, definitely want, you know, upside here and to be open-minded about what could happen going forward.
Very good. Ryland, let's move quickly here over to Livestock. Rough day yesterday, fats and feeders, but our hogs were, you know, solid. So what are your thoughts here this morning?
Yeah, I mean, this was that kind of risk that we talked about, you know, that it just seemed like a little bit too soon for everything to really turn around, and the focus still staying on the beef market here. I mean, beef was right back down. So it just feels like, and we got some lower cash trades. So we're still seeing those fundamental aspects still kind of lead the selling pressure. I mean, we're testing lows from March 9th, and that was the day we really turned around. So we're retracing this full move here, but obviously it does look a little bit seasonal, so I think there is some cautious optimism that things could turn around. We just need to kind of feed a little bit more of a bullish perspective after we get through this month. Cattle on feed report will be out here on Friday. I mean, obviously trend of low placements is still likely to continue. On feed inventory is expected to be up about 2.2% from last year. Placements down about 2%, and then marketings at 97. So those placement numbers, pretty much the lowest that if that comes in at 1.424 million head, it's going to be the lowest placement we've seen for June since 2009. So I think overall the supply sentiment still isn't going to change. I mean, you look at the price and we're still at a very elevated price historically. This has just been a really big break. So I think it's a little bit of a reality check just for the price action on the board. If we do see these numbers really start to change things down the road here. I mean, like I said, it just doesn't feel like we're really building enough inventory near term. Maybe price got a little too high here and we're starting to see that little bit of washout, but overall we still have tight cattle supplies to deal with for the long term. And on the hog side of things, we're hanging on a little bit. I mean, August was a little bit lower, October higher. So we did see October close over the 100-day moving average. So technically things are starting to look a little bit better in the back end of the market. But as we know, we're coming into kind of a difficult time frame, especially seasonally when we start to see cash prices start to dip down a little bit. We move past kind of positive or peak seasonal demand here. So I think all eyes are still going to be on carcass right now. I mean, we did see cash break the 101 level, but on the other hand, belly's down another 308, carcass down $132. So I think that really, once again, is just going to keep that pressure in the front end of the market for now.
Very good.
Hey,
Ryan.
I actually had a question. Ben, you saw obviously the big trade that happened yesterday in November corn options. There's 100,000, which is just a staggering number by any, no matter what commodity is, but 100,000 of the $556 November call spreads bought yesterday. And I see open interest
in corn, right?
In corn, yeah, and open interest in those strikes are 55,000 now. So there was some, who knows what the trade was, right? Were they selling futures against it, whatever? But either way, that was a pretty staggering trade for one day in any kind of call spread.
I think, the thing that reminds me when I hear something like that, and I think it was blocked, is how big some of the players actually are that are participating in our markets. And I think that a lot of times that's why 2 + 2 doesn't always equal 4. And, someone's going to put the trade out there and you don't know what they're doing. You don't know what they're covering. You don't know what their bias is on that trade. We have seen this in the past, but that is a tremendously large number. So
is it 500 million bushels?
Mm-hmm. Yeah. Well, corn, I don't know if it matters, but corn open interest was up only 6,900. So it wasn't a big.
How do they trade it 105,000 times and open interest goes up 55,000?
Don't know. Right. Yeah. I don't think it was. Yeah. I don't think it was like a reversal of a trade either. So I don't know the answer to that.
Oh yeah. Open interest in that option was 437 contracts before that. Now it's 55, right. But it traded 105,000 times. It's kind of odd.
Right.
And if you look in December corn, there's some massive open interest strikes and calls above the market. I mean,
like where at?
I would keep that also in the back of your head. You get up to 490, there's 70,000, $5.52, 530, 93,000, 550 is 38,000. And those are big numbers. And I just would keep those in mind in case someone who's, they're maybe made a lot of money selling upside calls in corn for a while. And granted, there's a long for every one, but the short's the one that really has to manage it on a rally. So those are big numbers.
Very good.
Hence the volatility. Wonder why we can break and rally so much. There you go. Running through strike prices and big numbers. And we forget
biggest-
about just we talked about this, months ago, but just the amount of money in the system, right? Between equities and everything now, that there's just a lot more players, a lot more money chasing markets.
Yeah, you mentioned equities this morning, Justin. Pretty ugly on the outsides, given crude up $4 or $5 and stocks are off 700. So
Yeah. Yep.
a lot of stuff
A lot of
zinging
moving
around
around.
here.
Yep.
Yeah. Just came into the open here. We got Sepcorn up 2 1/4 here at 464. August soybeans are up 7 1/4 at 1240 1/4, and September Chicago wheat's down 2 1/4 now, 703 1/2. Tomorrow's Friday. Be sure to tune in. We got Fun Fact Friday with Brian. Always a good time. Just a second. We have one question that just came in late here, Justin, real quick. We're supposed to be mad about outside money being in our markets, right? Yeah.
Yeah. You're only mad when it goes down.
Correct.
Not
When they
going
sell
up.
it.
Not when it's
They can
going
buy
up.
as much as they want.
Sometimes they get smart and they do the right thing.
Good stuff, Nick. Link is in the description. Check out the War Room Report, access to premium content, reactions to USDA reports, an overall deeper dive into everything we discuss here every morning on the War Room. So check that out. Also, a portion of those subscription fees goes directly to support the AgYield NextGen Foundation, which, of course, has awarded 5 very deserving college students with significant scholarship dollars here this year. So we're really excited about what we're doing with the foundation. Be sure to check that out. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we'll talk to you again tomorrow.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content. All for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.